In 1973, one of the sharpest financial minds of the 20th century watched his own investment fund lose almost a third of its value. The next year, it happened again. By the end of 1974, the fund he ran with his own money and his clients' money had been cut by more than half. This wasn't a rookie speculator. This was Charlie Munger, a man who'd go on to help build one of the most successful investment operations in history. And the strange part is that this collapse, this painful stretch of his life, taught him more about money than almost anything he did right. Most people only hear about Munger's wins, the partnership with Warren Buffett, the billions, the wisdom quoted on posters and finance offices everywhere. What gets left out is how much of that wisdom cost him first, in real losses and real fear and years of getting it wrong before he got it right. That's what this is actually about, not the highlight reel. 4 specific lessons about money that Munger only learned because he paid for them first, with his savings in one case, with a decade of his career in another, and eventually with his own body. Each one changed how he thought for the rest of his life, and each one is something you can use starting today without losing $1 to learn it the way he did. Start with that crash, because it sets the tone for everything after it. In the years before he partnered fully with Buffett, Munger ran his own investment fund called Wheeler, Munger and Company. It did well for a long stretch. Then the market turned brutal in 1973 and turned brutal again in 1974, and Munger's fund, which held concentrated, aggressive positions, got hit far harder than the broader market did. Watching a third of your money disappear in a year is one kind of pain. Watching it happen again the following year, on top of the first loss, is a different animal entirely. It's the sort of experience that either breaks a person's nerve for good or teaches them something they never forget. For Munger, it did a bit of both. It shook him badly, and it quietly rebuilt how he approached risk for the rest of his life. Here's the lesson buried inside that pain. Munger came out of those 2 years with an almost religious aversion to being forced to sell, not an aversion to volatility itself, since he always accepted that markets would swing hard and that a serious investor had to live with it. His fear afterward was narrower than that. He never again wanted to be in a position where a downturn could take the decision out of his hands, where he'd have to sell good assets at terrible prices simply because he needed the cash or because leverage had backed him into a corner. That distinction matters more than people give it credit for. Losing money on paper during a crash is uncomfortable, but it's survivable if you can just wait it out. Being forced to sell during a crash is often permanent. The loss stops being temporary the moment you sign the trade. After that stretch, Munger became known, alongside Buffett, for sitting on enormous piles of cash for years at a time, doing seemingly nothing, while other investors mocked them for missing out on a rising market. What looked like laziness or excessive caution from the outside was really the direct result of 1973 and 1974. He'd learned exactly what it felt like to have no cushion left when the market turned on him, and he spent the rest of his career making sure he'd never feel that particular kind of helpless again. Cash gave him something specific: the ability to stay calm while everyone else panicked, and the ability to buy aggressively once prices finally collapsed and terrified sellers needed a way out. The lesson wasn't complicated in theory. Keep enough of a cushion that nobody can force your hand. It just took getting badly burned once for it to become real to him. The second lesson comes from a quieter place: his years as a practicing lawyer. Before Munger became known as an investor, he was a working attorney, and by most accounts a good one. He co-founded his own law firm and built a solid career doing legal work in Los Angeles. Steady income, professional respect, a life that looked comfortable from the outside. But somewhere in those years, Munger noticed something that bothered him more than he expected. Legal work, however skilled you got at it, had a ceiling. You traded hours for dollars. You could get faster and more efficient, and your income might climb steadily as a result. But there was always a hard limit set by how many hours existed in a day and how much a client would pay for one of them. There was no way for a lawyer's income to compound the way capital compounds when it's invested well. That realization didn't arrive as a single dramatic afternoon. It built up slowly the way real understanding usually does, through years of watching the difference between money he earned by the hour and money that multiplied on its own while he slept. Once he saw that difference clearly, he couldn't stop seeing it. He started shifting more of his energy toward investing, winding down his legal practice gradually rather than walking away overnight, disciplined enough to make the change responsibly instead of recklessly. But the decision itself was settled in his mind well before the paperwork caught up. He wanted to be paid for the value his capital created, not just for the hours his body sat at a desk. This is the part people tend to misread, because it sounds like Munger was dismissing hard work or ordinary careers, and that's not quite what happened. He wasn't saying trading time for money is worthless. Plenty of people build excellent lives that way, and he did too for years. His point was narrower. If your only source of income depends on your continued hours of labor, you've built a financial life with a ceiling baked in from the start. Stop working and the income stops with you. Capital doesn't have that problem. Money invested well keeps generating more money, whether you're working, resting, or on vacation. And over enough years that structural difference matters more than almost any single career choice. Munger learned this by living inside the ceiling long enough to feel its edges, and by watching what changed once he started building something that didn't have one. The third lesson takes us somewhere less obvious: real estate, and the years Munger spent as a developer before investing became his full focus. Early in his career, alongside a business partner, he got involved in building and selling residential developments in California. It went reasonably well, and for a while it looked like a solid path, but the deeper he got into it, the more he ran into something uncomfortable. Developing property called for a completely different set of skills than the analytical, business-focused thinking he was naturally good at. Construction timelines, local politics, permits, contractors, costs that shifted without warning. None of it had much to do with reading a balance sheet or judging whether a business had a durable edge. He could do the work. He wasn't bad at it. It just wasn't where his real strength lived, and every hour spent developing property was an hour he wasn't spending on the kind of thinking that came naturally to him. This is where his famous idea of staying inside your circle of competence starts to make more sense, because it wasn't some abstract rule he came up with in a library. It came from operating outside that circle long enough to feel the friction firsthand. He learned that competence isn't only about whether you can technically succeed at something. It's about whether the work plays to your actual strengths, or whether you're fighting your own nature just to land somewhere average. Plenty of people grind their way to decent results doing things they're not really built for. Munger's insight was that decent results bought at that much friction usually aren't worth it, especially when there's probably something else you could be doing where your natural advantages compound instead of fighting you the whole way. Eventually, he stepped back from real estate development almost entirely and put his energy into securities investing, the field where his mind, quick, curious, genuinely obsessed with how businesses actually worked, gave him a real edge instead of a constant uphill climb. He didn't leave real estate because it failed him. He left because he'd figured out through direct experience that his time was worth more somewhere else. That's a different kind of lesson than most people expect from a story about circle of competence. It's not just about avoiding what you're bad at. It's about noticing when you're capable but not exceptional, and having the discipline to move toward the place where you actually have an edge, even when what you're leaving behind is working fine. Which brings us to the fourth lesson, and it's the hardest one to talk about because it didn't come from a bad investment or a career decision. It came from personal tragedy that had nothing to do with money and everything to do with how Munger chose to respond to it. In his 20s, he went through a difficult divorce that left him financially strained while he was still building his career. Not long after, his young son Teddy was diagnosed with leukemia, and Munger spent agonizing months watching his son's health decline at a time when treatments for the disease were far less advanced than they are now. Teddy died. Munger was still in his early 30s, already carrying a failed marriage and financial pressure, and now carrying a loss most people never have to face at any age. There's a version of this story where a person becomes permanently bitter, where grief and money trouble combine into a kind of paralysis that follows someone for the rest of their life. That isn't what happened, and the reason why matters for anyone trying to learn from him. He didn't pretend the pain wasn't real. By every account, he felt it fully, but he made a choice, one he'd return to again and again whenever hardship hit later in life, to keep functioning, to keep thinking clearly, and to refuse to let devastating circumstances become a permanent excuse for bad decisions afterward. He went back to work. He rebuilt his career, remarried eventually, and put together a stable family life again. Somewhere in all of it, he developed an emotional discipline that later showed up directly in how he handled money. This ties into something Munger talked about often in later years. That rational decision-making was never about having no emotions. It's about not letting a temporary state, grief, fear, euphoria, panic, hijack a decision that needs clear thinking instead. Anyone who's watched the market during a crash has seen this play out at scale. Fear takes over, and people sell perfectly good investments at the worst possible moment because the pain of watching further losses feels unbearable in the moment. Munger's ability to separate what he was feeling from what the situation actually called for wasn't some trait he was simply born with. It was forged, specifically and painfully, during the years his own life fell apart when he had to decide over and over whether that would define every choice afterward or whether his judgment would stay intact despite it. Later in life, he faced another blow that had nothing to do with money directly, but tested the same discipline all over again. A botched cataract surgery left him blind in one eye, and for a stretch he believed he might lose his sight completely. Instead of spiraling, he started learning Braille, preparing methodically for the worst case while continuing to run investment analysis with the vision he had left. That's not a coincidence. It's the same pattern showing up decades later. Face the hard thing directly, prepare for it practically, and don't let fear of what might happen stop you from doing what needs doing right now. What ties all four of these together isn't obvious at first, since on the surface they look like unrelated categories of lesson. But underneath, there's one thread running through all of it. Munger never treated pain as something to avoid discussing or quietly bury. He treated it as data. Each of these hard lessons came out of a stretch where something genuinely went wrong, and instead of numbing himself to the discomfort or explaining it away, he pulled a specific, usable principle out of it and carried that forward for the rest of his career. That's a harder skill than it sounds. Most people go through painful setbacks and either shut down to protect themselves, or they tell a story about the setback that lets them avoid changing anything about how they think or act. Munger did neither. He let the pain register, then asked, with real discipline, what he should actually do differently now that he knew what he knew. That question, asked honestly and asked repeatedly over a lifetime, is arguably a bigger part of his success than any single stock pick he's remembered for today. If you're watching this thinking about your own hard years, there's something worth sitting with. The setback itself isn't the lesson. Plenty of people go through nearly identical hardships and come out no wiser, still repeating the same pattern with different details. The lesson only exists if you're willing to look straight at what happened and ask what it's actually telling you, even when the honest answer is uncomfortable, even when it means admitting you took on too much risk or stayed too long somewhere that wasn't right for you. Or let fear make a call that clear thinking should have made instead. Munger wasn't immune to any of this. A third of his fund gone, 2 years running, a legal career that quietly capped his future while he stayed in it longer than he probably should have. Years spent building competence in a field that wasn't ultimately his strongest one. A young son buried and nearly his own sight along with it. None of that was easy. And none of it should get minimized just because it eventually produced wisdom. What set him apart was refusing to let those years go to waste, and that refusal, more than any specific investment call, is probably the real engine behind everything he built afterward. If any part of his story lines up with something you've lived through, an investment that fell apart, work with a ceiling you can feel, a place you stayed too long, even though it wasn't your strength, or a loss that's still hard to talk about, it might be worth asking his version of the question. Not what happened to you, but what you're going to do with it now that you know. That question doesn't need permission or perfect timing. It's available the moment you're ready to ask it honestly. If you want more of these deep dives into the ideas and the lived experience behind them, consider subscribing, since there's a lot more worth exploring. Charlie Munger spent almost a century turning hard lessons into clear thinking, and the least any of us can do is pay attention to what he was willing to teach.